Welcome to the Daily Vibecasting. Today's mission is an energetic, really brisk deep dive. We are taking the most crucial high-stakes conversations buzzing on X and just distilling them down.
Right down into the essential knowledge.
Exactly. We are moving from the fragility of global finance all the way to the intensity of the AI hardware war and some major cultural shifts happening in real time. So let's not waste a second. We're jumping straight into what was, a genuinely alarming moment for global finance late last week, an infrastructure shockwave.
Oh, yeah. This wasn't a market crash driven by, fear or bad earnings. This was a physical failure that caused financial chaos.
Exactly. This post from @UnusualWhales got everyone's attention immediately. It spelled out the issue with just stark clarity. It says, breaking. CME has halted futures trading on stocks, currencies, and other markets, citing data center cooling concerns.
This is a monumental story, and it highlights systemic risk in a very, very literal way.
Yeah.
On what was already a volatile day, Black Friday, November 28th, the CME Group, which handles trillions in daily volume, just had to stop.
Trillions.
All because the cooling systems at their main data centers, run by CyrusOne, failed.
So just to be clear here, we're talking about the central nervous system of modern global liquidity freezing up for hours.
Right.
Because the AC broke.
That's it. And it's terrifying because it exposes this massive vulnerability that comes with, concentrated centralized infrastructure.
Yeah.
When just one node, one physical spot, one cooling unit fails, it disrupts markets globally. The online reaction was split. You had the dark humor about financial climate change.
Of course.
But you also had some very serious conversations.
The crypto argument, I'm guessing, came out immediately.
Immediately. Advocates for decentralized systems were pointing to this as proof that the entire global financial structure is relying on a single point of failure. It really raises serious questions about data center concentration. The system is only as robust as its weakest physical link.
And that concentration risk, it leads us perfectly into our next topic, which is all about infrastructure on a massive scale. The intense, ongoing AI hardware war.
Yeah.
Nvidia has been the undisputed king, but Google is swinging hard now, looking to shatter that monopoly. This post from @SemiAnalysis captures it perfectly. TPU v7. Google takes a swing at the king. Potential end of the CEDA moat. Anthropic's 1GW plus TPU purchase. The more TPU Meta6 IO AI Anthro buy, the more GPU capex you save.
This is a huge strategic pivot, and it's all designed to break what's called the CEDA moat.
Software lock-in, right?
Exactly, the lock-in. For listeners who aren't deep in the weeds, it's this proprietary software platform that Nvidia built that basically forces AI developers to use their hardware, even if something else offers similar performance.
And Google's trying to break that log using sheer economic efficiency.
Exactly. The specs on the new TPU v7 are aggressive. They match Nvidia's Blackwell on performance. But the real leverage is the cost. The total cost of ownership, or TCO, is 44% lower for them internally.
44%.
And for companies using Google Cloud, that translates to 30 to 41% lower costs.
That kind of margin is what drives these trillion-dollar decisions. And it's why that Anthropic deal was such a landmark moment.
Oh, it was seismic. Anthropic signed a $52 billion commitment for 1 million TPU v7 units.
1 million.
A mix of buying and renting. And this immediately shifts their hardware dependency away from Nvidia. But crucially for you, the developer, they're passing those savings on. They dropped their API prices by a staggering 67%.
And you're seeing competitors immediately feel that pressure.
They have to. The efficiency means every major player, Meta, xAI, OpenAI, is looking at massive TPU adoption. We're talking projections of cutting their GPU capital spending by up to 30% next year. This is a full-on assault on Nvidia's dominance, driven entirely by better TCO.
That need for massive, efficient scaling leads us directly to this fascinating story out of India. If hyperscale AI needs custom solutions, what about hyperscale national systems?
It's a great question.
This post is from @HarshJane85, the CEO of Dream Sports. Yeah. While hyperscaling a Dream 11, we tried all saucepots but broke everything India scale needed. Indian built SIS to manage 300 users, 16M concurrency, and 100K TPS HIsh. We're open sourcing this engine free forever.
Horizon OS.
This is just a perfect illustration of how global software solutions often just fail when they face localized, immense scale. Dream 11's demands are staggering.
India scale is clearly a league of its own.
It's a whole other level. Managing 300 million users, 16 million people on at the same time, and handling 100,000 transactions per second.
Wow.
So they found that commercial software just kept breaking. So what do? You spend a decade, use 500 engineers in Mumbai, and you build your own Horizon OS.
And now they're open sourcing it.
Which is huge. They're offering battle-tested, free tools and APIs to every other startup in India.
That feels like it's more than just altruism. It's a move toward digital sovereignty, isn't it?
Precisely. It reduces dependency on foreign vendors and gives the next generation of Indian startups the blueprint to scale independently. It's a huge technical donation.
Okay, from the difficulty of scaling hardware, let's shift to model utility. Are these incredible new AI models actually reliable when you put them to work?
That is the big question right now.
This post from @BrazerX captures the skepticism a lot of developers are feeling. A former Google DeepMind research scientist is basically saying out loud what many engineers feel right now. Gemini 3 is a solid web dev helper, but when it comes to real coding, it often feels overfit for benchmarks instead of real-world work.
And that phrase, overfit for benchmarks, that's everything. It perfectly defines the chasm in the AI world.
Yeah.
Models that are, genius in the demo.
But flaky in production.
Exactly, flaky in production. It's phenomenal at passing these very specific public tests, which is what the hype cycle loves. But when developers try to use it for complex, real-world coding, the results are just highly unreliable.
I wonder, though, isn't that just an inherent stage in training? Like, they're constantly learning, and won't the flakiness just sort of resolve itself with updates?
That's a fair point, but the frustration lies in the type of failure. The model is tuned to nail the test, not to generalize complex logic. So in practice, you get brittle code, logical errors, what devs call hallucination in the chain.
And stability is non-negotiable when you're building production software.
It is. This is why we're seeing a real shift. Developers are moving away from chasing the frontier model hype and choosing tools that prioritize stability. They're going with Claude or Cursor's Composer 1 because they need a tool that just works every single time. Utility is winning out over raw genius.
Shifting gears completely now, let's tap into some serious gaming nostalgia. Gamers who were around in 2018 might remember Hytale. It's had a real roller coaster history.
Oh, yeah.
There's finally a launch date, but it comes with a massive, massive caveat. Here's the founder, that's Simon Hypixel. Hytale early access date is now set for January 13th, 2026. This is true early access, meaning it's still very much unfinished and broken, but you have mine and the team's commitment.
That honesty is so refreshing in the gaming industry, right? You're just owning the baggage. I mean, this game was teased in a viral trailer, acquired by Riot Games, then shockingly canceled in 2022.
But the founder, Simon Collins LaFlamme, heroically bought it back. He regained independence just a few weeks ago.
Yes, and that's what's fueling this. They are launching what is basically an unfinished 4-year-old prototype. He even set the price at $20, saying anything higher wouldn't be fair. That transparency is what's keeping the community on board.
And we saw other indie creators pushing unique visions too. Jules Faraday flagged RPG, a military sci-fi project by an Ethiopian-Canadian artist, Hytale. It's blending a 90s style with cosmic horror.
Which just proves that unique, independent voices are thriving outside the big studio system. And that focus on, volatile consumer assets links directly to the market cycle chatter we saw.
Okay, let's talk about the retail apocalypse, or at least one corner of it.
Yeah.
This is from @Draki. They miss one SNAP payment, and the sneaker bubble pops.an.
The sneaker resale bubble is officially done. We saw viral reports confirming the collapse late this year. Prices for premium Jordans, Yeezys, they're dropping below retail value.
It's a classic speculative bubble failure. Inflation hits, supply surges, and the hype just can't sustain the price anymore. It's Beanie Babies all over again.
It is. And this brings us to Michael Burry, the person most famous for spotting bubbles, who offered a very timely dose of history. He just posted, "My 1999, free to all."
This is Burry from The Big Short, releasing his personal writings from 1999, where he detailed his huge contrarian bet on Apple right before the dot-com bust.
And the relevance is so high because Burry has been actively warning about the 2025 AI bubble, even shorting Nvidia. He's basically giving you the historical blueprint for how he identifies these overvalued sectors. It's a masterclass in discipline.
Speaking of money and how it's distributed, we saw the old tax parable make a comeback. Here's the start of the post from @AlanJL Smith. Suppose that once a week, 10 men go out for beer, and the bill for all 10 comes to £100. If they pay their bill the way we pay our taxes.
The old barstool economics parable. It's designed to criticize progressive taxation. The setup is that the richest guy pays 59% of the bill. When the bill gets a cut, he saves the most money, which makes the others resentful.
Yeah.
And the argument is that if he feels unappreciated and leaves, the whole system collapses because the poorer men can't afford their share. It's a very potent narrative.
whether you agree with the economics or not.
Exactly. It frames the debate around resentment and incentives, and the replies were a perfect microcosm of the online economic debate. One side praised its clarity on incentives, the other pointed out that it ignores how wealth is actually generated in the first place.
Okay, let's pivot to some quick checks on sports and global solidarity. First up, huge congratulations to Bukayo Saka. At Arsenal Radar shared the news. Bukayo Saka has reportedly gotten engaged to his long-term girlfriend, Talami Benson, after proposing at a London hotel with a huge ring.
Wonderful news. And of course, the online community immediately made it about football, with @False9 joking that manager Arteta made it a contractual requirement. Just standard derby banter.
And speaking of that derby, the upcoming match against Arsenal just got a massive boost for Chelsea at CFCPI's reported. Maresca says not only is Palmer available, he's available to start too.
Cole Palmer, Chelsea's top scorer, fractured his toe, and his immediate return to the starting lineup is a huge offensive recovery for them heading into that crucial match. A major lift for the club.
And finally, a quick note on corporate response to tragedy. Tim Cook posted this. Heartbroken by the devastating fire in Hong Kong. Everyone affected is in our thoughts, and we are thankful for the first responders. Apple is donating to relief efforts on the ground.
This is in response to that massive, devastating fire in Hong Kong's Tai Po district. Apple's rapid, public, philanthropic response is a very consistent pattern in their corporate strategy.
Let's discuss a couple of digital life debates, starting with a classic sports score confusion. At the TUFAB posted this warning. There's no way Flash Score can update before the real-time action on the pitch. Don't be deceived.
This myth just persists because people confuse real time with TV broadcast time. The apps get data from stadium feeds almost instantly. But TV broadcasts have a built-in production delay, maybe 5 to 10 seconds. So the app does beat the TV, which creates this illusion of seeing the future, but it's not faster than the actual event in the stadium.
Now, for a truly dark prediction about how decentralized finance could influence geopolitics, this post from @TomShow711 is genuinely alarming. How long will it take until this spins out of control and degenerate gamblers investors start funding different factions in African conflicts?
This is a critical risk of anonymous crypto betting. We know Polymarket already hosts markets on sensitive events like the Sudan ceasefire. The fear isn't just placing a bet. It's the evolution of that financial volume, like the $44 million wagered on the Ukraine war into direct material support.
So it's not just finance anymore, it's geopolitics enabled by anonymous tech. Is there any way to regulate that?
That's the core problem. The anonymity makes it incredibly difficult to track the money. So bad actors could potentially fund militias like Sudan's RSF with material aid, like drones, completely bypassing sanctions. The prediction is that conflict betting becomes a decentralized, unregulated source of military funding.
That is a truly sobering thought. Let's pivot quickly to the cultural pulse, specifically in Nigeria, where the volatility of fame is on full display. At TUFAB said, person blow for 2018 November, con unblow for 2025 November. That's crazy.
This is aimed directly at Afrobeat star Burna Boy. His massive breakthrough was late 2018, but this November he's had tour cancellations due to low ticket sales. This comes after a viral incident where he ejected a grieving fan from a concert, which caused huge backlash. The fame cycle is brutally fast.
But the humor, thankfully, is still intact. @NeoOfficial gave us this great piece of Nyesha Twitter banter, which translates roughly to, I was just talking to my friend, then a fine girl called him baby in the background. He quickly ended my call, because I have to leave this misogyny work because people are leaving me behind.
That's classic online versus offline dissonance. It's a humorous admission that the performative online misogynist persona is losing out to the need for real-life relationships. It's great banter.
Before we wrap, a few final quick checks. First, a pro tip from @Sasquatch on cold emails. Pro tip. When sending a cold email, make your subject line do the heavy lifting. Back then, my go-to line was, 3 ways I can add value to your firm.
That specific, value-driven phrasing is key. In a flooded inbox, a subject line that clearly says what you offer, not what you want, is a guaranteed way to spike the open rate.
And for a touch of nostalgia, @PaulPaps gave us the perfect image. This is what the waiting area at your local mechanic should look like.
He's invoking a very precise memory, right? The vintage Pepsi machine, the smell of 30-weight oil, the shop cat asleep in the corner. It's the anti-corporate garage vibe, and it resonated deeply.
And finally, a quick mention of space democratization. SpaceX launched its Falcon 9 Transporter 15 mission, carrying 140 small satellites via their rideshare program. They're offering access to orbit for as low as $300,000 per 50-kilo payload. The accessibility of space is just constantly increasing.
So today, we've synthesized these massive themes. The intense financial vulnerability from just a failed cooling system.
The economic warfare driving the AI hardware race.
And that complex balance between genius and just plain utility in new AI models.
It's a snapshot of a world defined by volatility, where trillion-dollar markets can hinge on one AC unit, and where DeFi can go from a betting hobby to funding real-world conflicts.
And, if the scale of that volatility feels overwhelming, I want to end with a viral thought shared by @Senator Riggio. A simple declaration that just cut through all the noise.
I don't know, man. I just got this crazy confidence that everything will work out in the end.
That simple statement, amid all this chaos, resonated with tens of thousands of people.
It did. And what's compelling here is the psychological principle behind it. Expressing that kind of crazy confidence, even when the evidence is shaky, is strongly correlated with a growth mindset. It's not just passive hope.
It's actionable. It's actionable momentum. Declaring confidence pushes you to persist and problem solve. It suggests that optimism itself can be a force against the very volatility we've just been talking about.
So amid all the hardware wars and financial shutdowns, the ultimate takeaway is the power of the human mindset, a potent thought to carry forward. We'll cast the vibe again tomorrow.